I'm ready to share. I've taken losses on 2 companies and hopefully position my portfolio better for 2025. This sharing is hard to do because it's quite humbling and hopefully you benefit from it. This is my September 2024 statement in my CDP account. Real statement, 12 holdings that you can see over there, and it doesn't include stocks in my SRS, which include other names like Bumitama Agri, First Resources, SETS, Centurion, and Nordic Group. In my trading account, I have also LHN. So this list, since there are changes already, it reduces the pressure when I share with you my thinking process. And other than Kingsman Creative, which I bought in my 20s, all the rest are stocks that I've put significant time to analyze, and I've even presented FOC with you here on YouTube. And they are Baosteed. The crown jewel for this company is a geospatial segment. I'll leave links above if you have missed that. The second is Capital Invest. This tech is recently created. I've added more to it. Capital Invest is moving asset light, and they are of course the sponsor of many of Singapore's best REITs. The third, Ascott Trust, one of the REIT Capital Invest owns, and in my opinion still very undervalued. The fourth, Delphi. Delphi has a market leadership in chocolates in Indonesia. Currently cocoa prices have skyrocketed. That has impacted their profitability, but at least in my opinion, the brand is still very strong. The fifth, Fraser Singapore Trust, the biggest pure play Singapore mall REIT. The sixth, Genting Singapore, which I'll cover in a quick while. The seventh, iFAST. iFAST is where I built a lot of my private clients' portfolios. I think I know what they're capable of, and their Hong Kong segment has taken off faster than what I've expected. The eighth, Kimlee. Kimlee have one of the largest, if not already the largest, Singapore coffee shop chains. Kingsman Creative. The 10th, Mapletree Industrial Trust. I shared before, it's one of my biggest holdings. And the real estate it owns are in data centers. If you haven't seen one of their tutorials, check out the links above. The 10th, Mapletree Pan Asia Commercial Trust. I'll share a bit more with you in a while. Malaysia Smelting Corporation Berhad. This is one of the world's biggest tin miners, and tin is a core component in semiconductors as well as electric vehicles. It's a pure commodity play. And number 12, Straits Trading, which owns real estate as well as Malaysia Smelting Corporation Berhad. Recently, this has regained a little bit because Suntec has some privatization news, and ESR also has a buyout offer. There are tweaks I made to this list, and if you appreciate the transparency, help me smash the like button early. And hopefully there are learning points that you can take away in your own investment journey. And let's start with the first name that I've made cuts, which is Mapletree Pan Asia Commercial Trust. I've shared before in August that I've made cuts already. In this previous video, I'll leave links above also. If you don't know, Mapletree Pan Asia Commercial Trust owns VivoCity, which is one of Singapore's best malls. Not just that, they also own Mapletree Business Park, which is also prime real estate. However, they also own some real estate which are not doing too well. Japan offices, recently there's some turmoil over there. Festival Walk in Hong Kong, that's a shopping mall which deteriorated in terms of performance. So since that video, I've actually continued to cut stake, and I'll share a bit more where I've allocated to. You know, investment is not all rosy. I hope it was. And I produced this first to share with you the bad news, and I'll balance this video with my top 5 gains for 2024. And to that video, there's an obvious take that's gained substantially. So if you're curious about it, smash the subscribe so that you get notified when a video is ready. I don't know if you caught it, but just now I've hinted on who is the second name that I've cut, and in bigger amounts some more. This second name is none other than Genting Singapore. Recently, there was some bad news in third quarter. Profitability actually dropped 63% year on year, and not just that, it's a quarter on quarter big drop also. Some say that there's some unluckiness in the casino side. But with this performance for third quarter, my hopes of increment on dividend is probably dashed already. Then Genting also received a 2-year extension on its casino license. If you read below, you realize that the Gambling Regulatory Authority, GRA, has actually deemed Resorts World Sentosa's performance as unsatisfactory in a number of areas. That's why they've only awarded a 2-year extension. My gut feeling is that's still also small news, just like a warning letter. The bigger thing that worried me in terms of my thesis is the recovery in tourism. In my opinion, 2024, tourism has recovered full swing already. All the families that I speak to are all traveling all around the world. These are the latest tourism numbers. You will see that 2023 compared to 2024, yes, there's still a small increment month on month. And one of the key drivers is China. China has relaxed its tourism already. And when I think deeper on this, I ask myself this question: will 2025 tourism in Singapore be much better than 2024? I'm not too sure about that. I was pretty sure 2024 is going to be better than 2023. And 2023 is confirmed better than 2022. But next year, what are the kickers for more tourists to come to Singapore? That deep question got me to look into my Genting stock again. This is my journey owning Genting Singapore. You see that back in 2023 start, there was a great surge up for travel-related assets. Whole industry re-rating, and Genting was one of the top performers then. I still maintain that other than MBS, Genting has the best hospitality asset. I started buying then and creating content on Genting Singapore. Then of course share price fell, but it recovered again in end of 2024. The key reason? China has relaxed its tourism standards, and there was another 20% surge up. I had all the hopes that will bring Genting to a substantially higher share price, as pointed out in the green arrow. That's why my moves were to accumulate Genting, as you can see in this transaction table. At the start of 2023, I started accumulating on Genting. Then when price dropped, I was still bullish on it. These are reflected in the orange boxes. And when China relaxed, that's when I further accumulated on Genting. That's in the red box over there. So all in all, you would see that if we plot this entire transaction table onto the share price chart, it will look roughly like that. Orange arrows are periods I bought Genting. Purple ones are those that I've taken profits on. Red arrows are where I've cut losses. I had to make this painful decision because I realized the green arrow may not materialize what I imagined. China tourists coming back did not propel Genting to higher heights, but it sank lower. So the question for myself is there something wrong with my T&Cs or not? And back to the point, I don't think travel in 2025 is going to be much better than 2024. I can't even be sure if it's better. What if there's a recession in May of next year? We really don't know. All the barriers to travel have all been unlocked already. I can't quite see where the next big wave of tourists will come from. So my decision is to only keep Escort as my travel asset and cut away Genting Singapore. I know there will be some that will gloat in the comment sections below. These are mistakes, and on hindsight, we are all the more wiser. And to this point, if you have also bad investment decisions that you have been thinking very hard on cutting away, relook at the fundamental investment thesis. For myself, Mapletree Pan Asia Commercial Trust, Hong Kong's revival. That has stopped. Genting Singapore, Singapore tourism needs to be shooting back up. But 2025 already, there's not much more to shoot already. And that's why I thought it's time to realize mistakes. I try to take learning points also from Warren Buffett. He sold away his entire Paramount stake, admitting that he's 100% responsible for that investment decision. He has cut losses at more than 50% off because he no longer thinks Paramount has the assets to be a great entertainment company. Temasek, they've also cut investment losses before, and this is just one of them. There was once a point where I thought Genting's future was very bright. If tomorrow Genting Singapore wins a casino in Thailand, for example, they have been trying to bid for overseas assets for quite a while. Korea didn't materialize, Yokohama didn't materialize, but what if Thailand materializes? I understand that it could shoot up easily back to $1.20. That of course will be a big regret factor that I understand as an investor. Currently, I don't have that much money free lying. I've identified Propnex and iFast as big positions on the build, and that's why I have to redeploy capital. I feel a bit more confident on growth over at these two companies. You know, sometimes you have to be a bit stubborn and hold on, but sometimes we just have to eat the humble pie and move on. I'm not here to share only wins with you. That's what investment courses like to tell you. I don't do that. I share my journey, and hopefully you take learning points and become a better investor yourself. And in investing, the way we make money is to hold on to winning stocks as long as possible. They can double, triple, or even fivefold, tenfold. That will make all the difference in your investment journey. Sometimes what we foresee, new information comes about, and we have to make hard decisions. So again, thank you for your support. Thank you for watching right at the very end. And as always, I'd like to invite you to check out this previous tutorial on my trading portfolio worth more than 200,000. That has skyrocketed and will be the bedrock for the next upcoming video for my top 5 winners currently. With that, sign off from here and see you there. Invest safely as always. Take care and goodbye.